Mr. Virat Joshi, CEO and whole-time director, Mr. Manish Dawar, Group CFO and whole-time director of the company. We would like to initiate the call with opening remarks from the management, following which we have the forum open for a question and answer session. Before we begin, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I would now request Mr. Ravi Jaipuria to make his opening remarks.
Good afternoon, everyone. I warmly welcome you all to our second earnings conference call post-listing to discuss our business performance for the quarter 3 and 9 months ended December 31st, 2021. I hope you and your families are keeping safe and healthy. I'm pleased to inform that we have continued to build on the momentum in our business by way of store additions, revenue enhancement, and profitability. As a result of this strong performance, this has been the best quarter for your company in the entire history of DIL. At Devyani, our focus has always been on constantly improving the quality and safety of our operations. We also endeavor to enable our customers to experience the globally renowned brand at an accessible price point through our omni-channel network. Towards this goal, we continue to accelerate the expansion across our markets. We have opened 81 net new stores in Q3 of the current financial year. With this, we have added 192 net new stores across our brand portfolio in the 9 months ended December 31st, 2021 of the current fiscal year. Our long-term focus is on consolidating our presence in key metro cities while tapping into smaller towns, enabling us to take our brands closer to our customers. As on December 31st, 2021, we operated 339 KFC stores, 391 Pizza Hut stores, and 50 Costa Coffee stores in India. Our total system stores count stands at 884 across all our brand portfolio. With consumer returning back to dine-in and our continued focus on improving delivery sales, we surpassed our pre-pandemic performance in quarter 3 of the current fiscal year. We will continue to work hard on improving our performance going forward. We have also seen another wave of pandemic by way of a new variant towards the back end of the calendar year 2021. This has again resulted in multiple restrictions in various states, leading to some impact on our store operations and higher contribution of delivery in January. We are well placed to capitalize on the significant opportunity that India presents in the food service industry and more particularly in the QSR segment. Our brands are well positioned to cater to the young Indian consumer expectations and meeting their challenging lifestyle and eating our habits. With this, I would like to conclude my address and now hand over to Manish for his comments. Thank you.
Thank you, Mr. Jaipuria. Good evening, everyone. A warm welcome to all of you for sparing your valuable time and making yourselves available for our quarter 3 FY21-22 earnings conference call and our second results call post the listing in August 2021. As mentioned by the chairman earlier, DIL has had a strong third quarter and we are on course to pursue our strategic growth objectives with a strong financial discipline and a rigorous focus on operational execution. As we mentioned earlier, in the current quarter, we opened 81 net new stores by adding 40 new stores for Pizza Hut, 30 stores for KFC, and 5 new stores for Costa Coffee, including 1 flagship store in Gurgaon. We continue to expand to new cities and have opened stores in 19 new cities in the last quarter. With that, we are now present in close to 200 cities in India across our brand portfolio. Outside India, we opened 1 new store each in Nepal and Nigeria. As a result of this aggressive store opening momentum, we now operate 391 Pizza Hut stores, 339 KFC stores, and 50 Costa Coffee stores as at December 31st, 2021. We also operated 28 stores in Nigeria and another 18 stores in Nepal. The total system-wide store count stands at 884 as of December 31st versus 803 stores a quarter ago, and a count of 692 stores at the beginning of the current financial year. We continue to deepen our presence in the existing clusters as well as increase our footprint in the emerging cities in India. In our core brand portfolio, metros account for 386 stores as of December 31st, representing 49% of pan-India store count. We have reported a strong business and financial performance during the third quarter and 9-month period ended December 31st, 2021. DIL consolidated revenue from operations grew by 65% year-on-year and 21% quarter-on-quarter to rupees 624 crores in quarter 3 FY22. The growth was driven by new store openings coupled with great consumer turnout during the holiday season. While on-premise sales picked up traction in the current quarter, the in-home consumption also remains strong. This has helped improve our ADS numbers as well as the SSSG rates across our core brands. Please note that on-premise is expected to dampen a little bit again because of the third wave of COVID hitting all of us in the form of new variants in January 2022. Our international business also reported healthy performance during the quarter, with revenue witnessing a 22% growth on quarter-on-quarter basis. The profitability in the local currency as far as international operations are concerned is in line with the rest of the portfolio. As mentioned earlier, the dine-in sales made a great comeback, with on-premise sales improving further to 64% for KFC, from 56% in quarter 2 FY22 and 42% for Pizza Hut from 38% in quarter 2 FY22. On-premise refers to the total sales from dine-in, eat-in and takeaway sales. Coming to the core brand performance, KFC registered a strong performance with a revenue growth of 64% Y-on-Y and 20% quarter-on-quarter during this quarter. KFC delivered a gross margin of 69% with a strong Y-on-Y growth. Gross profit grew by 69% and stood at rupees 251 crores for the brand. Brand contribution stood at rupees 83 crores with a margin of 23%. Again, a strong Y-on-Y and a sequential growth performance. ADS for KFC stores came in at approximately 124,000 for the quarter, higher than 112,000 a year ago and 116,000 a quarter ago. SSSG for KFC stood at 24% during the quarter. Pizza Hut, our second core brand, also delivered a strong performance with a top-line growth of 64% Y-on-Y. Momo Mia Pizza, which was launched in quarter 2, continues to see a strong adoption. Gross profit stood at rupees 118 crores for Pizza Hut, higher by 67% Y-on-Y, with margins at 75.6%. Brand contribution stood at rupees 26 crores with margins at 16.8%. We are nearing the 400 store milestone for Pizza Hut as far as Devyani Pizza Hut stores are concerned. Pizza Hut ADS maintains its growth momentum and is now at 47,000 rupees versus 40,000 a year ago. SSSG was higher at 25% during the quarter. With the quarter 3 performance, Pizza Hut is a strong rupees 600 crore brand for us on an annualized basis. Revenues from Costa Coffee grew 88% Y-on-Y. Gross profit stood at rupees 11 crores with consistent margins close to 80%. Brand contribution stood at rupees 5 crores and margins at 32.1%. We continue to focus on improving our profitability by maintaining and managing unit economics and achieving economies of scale. During the quarter, on a consolidated basis, our gross profit increased by 71% Y-on-Y and 22% quarter-on-quarter to rupees 446 crores, with gross margins improving by 270 basis points year-on-year to 71.4% in quarter 3 FY22. On a pre-Ind AS 116 basis, consolidated EBITDA improved to rupees 103 crores, more than double the rupees 46 crores in quarter 3 of last year. Reported EBITDA, which means post-Ind AS EBITDA, increased by 67% to rupees 148 crores in quarter 3 of the current financial year, from rupees 88 crores a year ago. Reported EBITDA margins were healthy at 23.7% of the revenue from operations. PAT this quarter came in at rupees 66 crores, primarily on the back of improved brand performance, new stores, and continued cost optimization initiatives. As you all know, DIL is a socially responsible business with diversity at its core. On World Braille Day, KFC introduced a Braille-enabled menu across its restaurants. KFC is also supporting the Indian Test Cricket Association and is the principal sponsor for the IDCA until the ICC World Cup for the Deaf in 2023. We support and develop gender diversity amongst our employees. In this direction, Pizza Hut has opened its first all-women store in Bangkok during the quarter. Although we operate other all-women stores in Nepal, but this was the first all-women store for India for Pizza Hut. We now operate 19 all-women stores and 13 stores are operated by differently abled employees. We believe such initiatives will allow our diversity hires to step up and play a greater role in our organization. To conclude, with continued strong operational and financial performance, we look forward to your continuing support in our journey, which we believe will create long-term sustainable value for all our stakeholders. On that note, I would like to request the organizers to open the forum for any questions or suggestions that you may have. Thank you very much for your time.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Chirag Shah from CLSA. Please go ahead.
Yeah, thank you for taking my question and congrats to the entire Devyani team on a great set of numbers. My first question is on Pizza Hut. We have covered some good ground in terms of improving the unit economics of Pizza Hut. Can you just talk a bit about what has worked so far and the opportunities going forward, as there is still significant room for improving unit economics? And also, if you can touch upon what are we doing to improve the brand connect of Pizza Hut with millennials, because in my view that is very, very important, and also on improving the delivery times.
Hi, Chirag. Chirag, a couple of observations on your questions. Thank you so much for your compliments. So the way we look at it, as far as Pizza Hut unit economics are concerned, as we said earlier around the IPO time and during our last call also, we've managed to migrate Pizza Hut very successfully from a dining portfolio brand to a delivery-focused brand, and that is what is helping us. And as we kind of open more and more stores which are delivery-focused, that contribution will continue to grow, and you will see that Pizza Hut will continue to kind of gather even more momentum. At the same time, with the unit economics getting better, we are able to roll out more stores. And therefore, again, as we pointed out earlier, that as we open new stores, the brand visibility goes up, the brand salience goes up, which actually helps our existing stores also. So therefore, we are confident about the Pizza Hut story. As we kind of continue to open and build more stores, it will help the brand going forward. As far as the brand connect with the millennials is concerned, I'm sure you must have seen we launched a new pizza called Momo Mia Pizza around the quarter, back end of quarter 2, around the puja time recently. And that has really connected a couple of core consumers. One is the young millennial consumers. Second is consumers from the east and northeast as well. And Momo Mia Pizza has seen a very strong adoption. If you see the communication also on Momo Mia Pizza, it's absolutely targeted to the young millennial consumers in terms of the language, in terms of tonality, in terms of brand ambassador. So that is how we are trying to kind of build the consumer connect, which also kind of works functionally as well as impacting the consumers from a psychology point of view.
Okay, sure. And just on how do you go about improving the delivery time for Pizza Hut?
As we continue to build, Chirag, more stores, it will help the delivery time, and that is how, because the only way we can improve delivery is to have thicker population of Pizza Hut stores. And as you see, over the last almost about a year, we've opened more than 100 Pizza Hut stores. So that is the only way that we can go forward for improving the delivery times.
And Mr. Jaipuria, now that we have the new Costa agreement in place, what are the plans to take Costa Coffee and Wango going forward in terms of network rollout?
Well, we have recently signed the agreement with Costa Coffee parent company, and as you see, we have started opening, but the momentum was much slower before because the agreement only got signed in August. So if you saw, we opened, I think, 5 stores in last quarter. And as every quarter goes forward, now you will see the momentum building much faster, and we are opening better and better locations going forward. So I think in the next couple of quarters, you'll see really the traction of Costa Coffee coming, as it's a fabulous brand, and the EBITDA margins are very high, the gross margins are very high, and it is doing extremely well. Wherever we have opened, it's giving us great results, and I think we just need to wait for another couple of quarters to really see the movement of this brand, which flagship store. And we have opened one flagship store just now, which has given us fabulous results, and in Gurgaon, and now we are opening flagship stores. Going forward in the next 2 quarters, you'll see at least 6 to 8 flagship stores coming up, which will make a big difference to the brand salience.
Got it.
I'm very confident with Costa.
And any change of thoughts in terms of taking the Wango brand forward?
Yeah, Wango, as you know, does extremely well where there is enough population or enough crowd. Unfortunately, because of the COVID, the airports have become weaker, less people are traveling. All the shopping malls where we have in food courts or where there is large salience of people has not happened. So I think Wango also, as soon as this COVID issue resolves, which hopefully will resolve by this month, then you will again see from next quarter, I think you will start seeing some real movement in the Wango business.
That's very helpful. And Manish, can you just also touch upon what are the LDS improvement levers that you're going to be using? Can you hear me now?
No.
There's a huge amount of disturbance.
Okay. Is it better?
No, something is wrong. Can't hear at all.
Okay, I'll join the queue later. Don't worry. Thank you.
Thank you.
Thank you. The next question is from the line of Vivek Maheshwari from Jefferies. Please go ahead.
Hi, good evening, team. Am I audible?
Yes, Vivek, you are very audible.
Great. Great results. A few questions. First, on the P&L side, so sequentially, gross margins have slightly moved up, and this is a busy quarter. Your revenue numbers are higher, obviously, on a sequential basis. But when I look at margins, I would have thought there would have been an uplift. And when I look at staff costs as well as other expenses, those have moved quarter on quarter. So can you just elaborate on, because we don't have the last year's numbers, so I just want to make sure how the seasonality works in third quarter versus second quarter.
Hi, Vivek. Vivek, as you know, quarter 3 is a holiday quarter. It starts with basically the Durga Puja and then gets into Ganesh Puja on the western side, and then Diwali, Dussehra, followed by Christmas, New Year, and also quarter 3 has traditionally been a very strong quarter for us. Not only for us, but almost the entire industry. So therefore, that obviously helps. At the same time, coming to your question on gross margins, we took a little bit of price correction on KFC during the beginning of the quarter. It was a minor price increase. As we said in the last quarter that chicken prices were going up, and we kind of successfully managed to pass on that price increase to consumers. On Pizza Hut also, we've seen the input costs going up, but so far we've managed Pizza Hut without a price increase. We've kind of tweaked some offerings. We've tweaked some deals to be able to better the gross margins very, very marginally. So we are evaluating the price increase for Pizza Hut. The final decision has not been taken yet. So we will come back to you guys whenever a final decision gets taken.
Okay, got it. Second, on this, let's say Pizza Hut ADS of 47K, what is your aspiration? Not next 1 year, 2 year, but where do you think this number should ultimately settle at, or what is it that your, let's say, target or aspiration would be in the medium term?
Well, we hope ultimately our target should be nothing less than Domino's, but it's a long way off, and for me to say anything and say any targets would not be fair. I think we are working hard, and I think with opening more stores and getting more momentum in Pizza Hut, we have said that during the IPO time that we expect at least a 10% increase in our SSSG, and which has happened better than that actually. So I think we should continue, and hopefully every year we should see some reasonable momentum as and when we keep on opening more stores and more momentum happens and we have more money to advertise and take this brand forward.
Sure. And conversely on KFC, where you are at 124K, now is it fair to assume that this number will probably move more in line with inflation and a few percentage points higher for the older stores, whatever the equivalent number is, or which essentially means that SSS cannot be even closer to double digits, but more like, let's say 6-7%. Is that a fair number, or you think you can do better than that? Once there is a normalized base, etc., etc.
Well, I think in KFC, as we had indicated before, if we can get 4 to 5% SSSG, we'll be quite happy as we are opening more stores and covering more areas. But if you look at the 124, which is actually an exceptional number, which is more because of the festival season, so I think you cannot take the base of this 124. But quarter on quarter and year on year, we expect to 5 to 6% SSSG growth.
Got it. And last question, the pace at which you are, adding stores in your, let's say in your models, what is the level of, casualty that you build in for these stores? Because when you're adding, at such a pace, there will obviously be, stores which will not work out for various reasons. So what is a fair number if we are taking, we are, forecasting these? What is the level of casualty we should build in?
See, we already built in, and there will be always some exceptions where you make an error or the store doesn't work. So in our mind, if it is less than 5%, we have done a great job. Over 5%, but under 6-7%, we are still okay. Beyond that, it starts hurting. So right now, thank God, we have been way less than 5%, but I think 5% would be a realistic number to go forward.
Perfect. Thank you very much and wish you all the best.
Thank you.
The next question is from the line of Nihal Jham from Edelweiss. Please go ahead.
Yes, thank you so much. Good evening to the management and congratulations on the strong performance. 3 questions from my side. Starting off with Pizza Hut, I just had an observation that when I look at the share of off-premise in the corresponding quarter of last year, it is actually higher and it has fallen this year. Whereas I think this quarter has been a lot about dining in. So is it that this is a reflection of the fact that most of our network now is delivery aligned? Would that be the right way to look at it?
Yes, partly, absolutely, because all the new stores we are opening is all delivery based.
Absolutely. And what would be the current mix of delivery-based stores and approximately the average square footage of them?
So our delivery-based store is about 800 to 1,000 square feet, and depending on the location, but fundamentally between 800 to 1,000, 1,100 square feet.
Sure, this is helpful. The second question again related to Pizza Hut was that we've seen a very strong store addition of 94 stores in Pizza Hut in this year itself, but we still managed to improve our margins on the brand contribution. So is it that the existing cohort of stores is doing very well, that the new stores margin is being compensated for that, or is the ramp up of the new stores significantly much faster than what traditionally has been in most QSR formats?
I think it is both. Our new stores are performing as well actually, and of course our old stores are ramping up. But we have enough headroom to open so many stores that we are picking and choosing the best sites and opening the right stores, and we have been, you can say, lucky, or our people are doing the right job. So in choosing the right locations actually.
So if I may just to understand that, say the stores we have opened at the start of the year, is the ADS very close to the average 47,000 that we are reporting, or does that number get achieved more towards a 12 or 15 months of operation?
It takes about 12 months, but the original ADS of the new stores is not as bad as we had originally thought that it would take that long. So it is still quite good, and the gap is not that big.
Absolutely.
Nihal, there are 2-3 things that we need to look at here. One is obviously as a strategy, the smaller format stores are working very well for us, and obviously let's say when we go to a new location at a smaller format delivery focus, it makes eminent sense that store kind of starts to perform well earlier. If you remember, we had earlier talked about a ramp-up period of 15 to 18 months.
Yes.
We are seeing that as a result of, we've talked about our other delivery strategy in terms of relying on food aggregators. That is helping us to kind of ramp up the stores faster because the stores become visible a lot more earlier compared to our own delivery network and our own efforts. So therefore, that has also helped. At the same time, as Mr. Jaipuria said earlier, that Q3 was a strong quarter in any case. It was a normal quarter from a COVID perspective, and we saw very, very strong consumer turnout. So there are a lot of macros which have also helped us from a margin perspective.
Understood. This is helpful. One last question from my side is on the international business. Now, this business had seen an addition of at max, say, I think 5 to 7 stores over a 3-year period. But just in the last year itself, I think we've added 10 stores, and the ADS at 150,000 is much higher than what even the India business has achieved. So I don't have a comparable number, but is it that we are turning our focus on ramping up operations here, and what has led to this change in the international business?
So Nihal, if you remember, we had talked about earlier that as far as our international operations are concerned, we are not expecting any cash coming back from them, and nor are we expecting to contribute anything. So as the business improves in those countries, whatever we are generating locally, we are investing back into the capex, and we are investing back into opening new stores. So therefore, that is what is happening. And at the same time, as far as the ADS is concerned, because if you see, let's say the international portfolio is more tilted towards KFC, the ADS looks stronger compared to India because KFC as a brand has much higher ADS versus Pizza Hut. Also, there is no COVID impact in those markets.
Yeah, also the COVID impact in those markets was much lower than India.
Understood. That's clear. Thank you so much. I wish you all the best.
Thank you.
Thank you. The next question is from the line of Vikrant Kashyap from KR Choksey. Please go ahead.
Good evening to the team, and congratulations on good set of numbers. Sir, I have 2 questions. One, we have added stores in new cities in last 2 quarters, and in the peak season to the last of Christmas and New Year, we see COVID third wave picking up and continuing in January. So can you throw some light how we have impacted in new cities? How is the performance there?
So new cities, Vikrant, has been a mixed bag, to be honest, because let's say we've seen a few cities which have seen a very, very strong and very early adoption, whereby we've really kind of managed to ramp up the numbers in a few months' time. So therefore, whereas let's say there are some of the other cities which have taken a little longer term, but overall, as we indicated earlier, that it takes about 12 to 15 months now, probably more closer to 12 months than 15, is the overall average, you can say. Obviously, it will be a mixed bag in terms of where. So let's say, for example, we've seen that whenever we open a new store in East, it ramps up faster. Let's say in Karnataka, it's a little slower. So I mean, there are some patterns which are emerging, which are coming new after COVID. So it is still kind of a little early to kind of definitely talk about as to what are the trends, but it is a mixed bag.
Okay. My second question, we had gone aggressive in store addition. We understand there was some lag due to COVID wave 1, wave 2 that we kind of trying to fill up. So, do you expect the company should continue with the same run rate, or it is going to soften going forward?
So I think there's no reason for us to slow down the run rate. We will continue with the similar run rate, give or take a couple of stores up or down.
So Vikrant, we talked about, if you remember, the initial guidance around the IPO time of 200 to 250 stores
Yes.
Between all our brands. So I think now with the performance that we kind of managed to deliver in the first 9 months, we think it'll be more close to 250 rather than 200 for the current financial year.
Okay, great. Thank you very much, and wish you best of luck.
Thank you.
Thank you. The next question is from the line of Percy Panthaki from IIFL. Please go ahead.
Hi, sir. Just wanted to understand one thing before I ask the question. This ADS number that you're giving, that includes which stores? Is it for stores which have completed at least 12 months or completed at least 3 months? I mean, what's the definition for the inclusion of stores into the ADS calculation?
No, this includes all stores which have opened till that date.
And this is worked on the basis of the operating days. So let's say, for example, if a new store has got opened, say, towards the last week of December, we will take those last 7 or 8 days to calculate these. So it is exactly all stores on the basis of number of operating days.
Understood. So I wanted to understand both for KFC as well as Pizza Hut, what would be the ADS if I look at only the stores which are at least 24 months old?
We are not disclosing that number separately, but obviously, I mean, given the new store additions that we are doing, the older stores have a higher ADS.
Yeah, so why I'm asking the question, if you get my purpose, maybe you can answer it in another way, is that once, let's say, your store opening pace sort of slows down after a few years, I just wanted to understand what is the kind of potential ADS for the entire company once the new store drag sort of reduces to a material extent.
First of all, I don't think our pace is going to slow down. So at least in the near future. So that's the first change. So that second question doesn't come into, I don't see our pace coming down for the next 5-10 years at least. So I can't answer you beyond that.
Okay, because in order to do some store economics calculations for a mature store, probably I'll take this offline. My second question is, supposing if I just make an assumption that you could have, let's say, a Pizza Hut store in every 2 kilometer radius, at least, I mean, both the franchisees put together should have at least one Pizza Hut store in a 2 kilometer radius, and KFC anyways there is no overlap of areas, so let's assume that KFC can have a store in a 3 kilometer radius. And if I do this exercise for the towns that you are currently present in, just for the sake of simplicity, let's forget about the new town entry. How many more stores can you open as per this algorithm in each of the brands?
I mean, I can answer you in just one question. If you look at our competition, they've already got, 1,400, 1,500 stores. We are nowhere close to it. So it'll take us at least a few years just to reach that level. So I think the room is so far. And if you see, even after they're having 1,500 stores, they're still regularly ramping up and adding more stores. And if you look at China, they're talking of 20,000 KFCs in China. So where is I don't know what is really the top or the bottom of it. We really can't answer. There's so much scope that India in the next 10 years, where it is going to be, I can't answer you. Understood.
Last question on margins. The restaurant margins for KFC at 22.5%, 23%. Is there any further upside to this, or now we are at a very healthy kind of margin level? And on Pizza Hut also, how much more leeway for expansion of margin there is given our store opening program?
On KFC, the margins are already so healthy that if we can sustain this, we'll be very happy. On Pizza Hut, obviously, as our top line grows, the margins can grow. So which we are hoping that year on year, as our number of stores increase and people get more used to eating Pizza Hut pizzas, I think our margins can improve. There is scope for improvement.
50 basis points will keep improving year on year.
So, and I think also as we are opening the number of stores we are opening, our HO cost will keep on getting compromised, and we will get some headway and some room from that.
Right, sir. That's all from me. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Ashish Kanodia from Ambit Capital. Please go ahead.
Yeah, thank you for taking my question. The first question is in terms of dining capacity. So as we open, smaller stores both for Pizza Hut and KFC, how does the dining capacity for these stores get reduced?
So the dining capacity remains the same. We got about 40 seater coming in about 1,000 to 1,100 square feet for a Pizza Hut store, which is in line with our strategy what we had defined before. And in KFC, still about 60 to 65 seater, which is there in a 1,750 square feet store in that year. So there's no compromise as far as the dining seating for the customers is concerned in that year.
And of course, if we feel that there is an area where there is more scope, then we open slightly bigger stores.
Okay, so if I understand it correctly, so as you open smaller stores, it's basically the back-end kitchen where the size is shrinking. Is that correct?
No, back-end kitchen size has also been remodified, but it's all over, because originally we used to have a 2,500 square feet store. Now we are talking of 1,700 square foot stores. So it's not only the kitchen can be only squeezed to a point, but they used to be 100 and 120 seater stores, which have come down to 60 and 70 seaters.
Ashish, if you look at, let's say, the way the consumption habits are changing for consumers, and they're wanting to have higher and higher in-home consumption, obviously it does not make sense to maintain the same store size. So therefore, we've done that all modeling and the entire analysis, and we've seen that the way consumer habits are going, we are not compromising on the number of seats which are there, but it is in line with the shifting trends, and therefore we are absolutely fine to cater to whatever is the dine-in capacity that we need.
Sure.
Stores used to be about 3,000 square feet with 150 seater in that in KFC.
Right. So basically from 3,000 square feet, 150 seats, we are closer to 60, 70 seats in KFC. And in Pizza Hut, maybe from 120 to, we are closer to 40 seats now, right?
Yes, yes.
Absolutely, and Pizza Hut is basically not a dine-in anymore. It's a delivery store, but if anybody wants to eat there, we give him the box and he can eat it out of the box. We don't have any service.
Sure, sir. That's helpful. And just a related question on this is, when I look at the ADS number and if I do a calculation, so of course, in case of off-premise consumption, absolute revenue has seen a solid growth compared to, pre-COVID levels compared to 3Q20. But in terms of on-premise revenue, and I'm talking about absolute revenue on ADS basis, I think KFC's revenue are, down by almost 20% and Pizza Hut is maybe down by around 25-26%. So is it because of, higher number of Delco stores in the current base versus more number of or higher share of delivery, dining stores in the older base, or is there anything else as well?
Ashish, if I were to compare the current quarter numbers in terms of dine-in or let's say on-premise consumption versus the quarter 3 of last year, then on KFC we've gone up by almost 8%, and on Pizza Hut also we've gone up by 7 to 8%. But at the same time, please remember that KFC, as we've kind of talked around the IPO time and the last quarter as well, KFC as a business has seen a structural change in terms of the demand shifting towards delivery rather than a dine-in. That's the reason we had started opening smaller format stores rather than a 3,000, 3,500 square feet stores. So we were conscious of that. We saw that coming and we were ahead of the time. At the same time, if you look at Pizza Hut, traditionally were dine-in stores, and we've consciously moved as a strategy from a dine-in portfolio to a delivery portfolio because we've consciously grown the delivery portfolio versus dine-in. But having said that, compared to last year in both the brands, the dine-in numbers are higher by 8% in both the brands.
Sure, Manish. That's very helpful. Thank you so much.
Thank you. The next question is from the line of Vishal Punia from Nirmal Bang. Please go ahead.
Yeah, thank you for the opportunity. I just had one question. You disclosed the mix of off-premise and on-premise for both the brands. If you can also help me with the breakup of own versus aggregator sales within delivery for both Pizza Hut and KFC, that would be really helpful. Thank you.
The big portion of the sales, as far as the off-premise is concerned, is coming from aggregators. Our own app is really very small, so it is growing organically. But our focus has been through aggregators because that helps us in many ways. So its bulk of the consumption is happening through the aggregators also.
So this would be same for both the brands?
Absolutely. On Pizza Hut, our own is little better than KFC, but again, relatively to the overall delivery size, both are small.
Okay. And what's your view in terms of going forward when most of the aggregators are now choosing to reduce promotion intensity within their platform? And even with dine-in proportion now increasing, what do you think that mix will look like going forward in terms of the aggregator sales within the delivery platform?
So obviously, let's say with that, I agree with you that there will be dine-in proportion which will kind of go up a little bit, but we are very happy with that because that is relatively a little more profitable business for us if the consumers walk in and dine in rather than a delivery based business. So therefore, it's a good balance which will come about, and we are very happy because the way we look at it, as far as the basic consumer habits are concerned in terms of eating out and outside consumption, given the overall consumer mindset, the relatively younger age, millennials, women, working folks, and so on and so forth. So eating out habits are going to go up. It is that mix which will keep on changing. So both ways we are winning.
Got it. Understood. Just lastly, in terms of one of the new launches that you have done for Pizza Hut, the Momo Mia Pizza, if you can call out how's been the performance in the very short period of time of the introduction of that product in terms of how it has improved sales per store or ADS for the stores where it was introduced. Yeah, that's my last question. Thank you.
Thanks. So as I said earlier, Momo Mia Pizza we launched around the Puja time, and it has seen a very strong adoption in all the Pizza Hut locations. It has seen a very strong contribution in East and Northeast because those are the consumers who are absolutely loyal to momos, and therefore this format has really kind of worked wonders there. But overall, it's seen a very strong adoption. We launched another SKU called cheesy momos. So between these two, the numbers are high single digits.
Are they available across regions where you are present?
Yeah, they are available across all the stores.
Understood. Thank you and best of luck for the coming quarters.
Thank you very much.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Trilok from Aditya Birla Sun Life Insurance. Please go ahead.
Hi, good evening. Thanks for the opportunity and congratulations on a great set of numbers. I just had a question with regards to the incremental store addition that you guys have already also guided earlier also. So is it fair for us to assume that, so far we have not seen any meaningful impact on the ADS despite the very strong addition YTD in the new stores? Is it fair, that despite strong additions, you will probably maintain such kind of ADS going ahead as well?
So, hi, Trilok. Trilok, as we said earlier, I mean, there's a huge amount of under-penetration as far as India as a country is concerned for these brands. But having said that, definitely there will be a point in time where it'll start to have some kind of marginal impact on the stores as we continue to kind of improve the density of the stores and the delivery times and so on and so forth. But I think for the next couple of years, we are in a good shape.
So sorry, maybe I should rephrase my question. My question is not about the opportunity size, or the store opening. Maybe that's not the point. The point is, YTD, the new store that you guys have opened up, are you seeing the same run rate, or or is the ramp up faster than you guys thought of in terms of average daily sales? Is what my question is.
The ramp up is a little faster compared to what we thought because our reliance on food aggregators whenever we go to a new city is obviously helping us.
Okay, so basically this kind of average is what we should think when we build our models. Is that correct?
Yeah.
Thank you. Really, and we wish you good luck. Thank you very much.
Thank you.
Thank you. The next question is from the line of Mayur from Profit Max Securities. Please go ahead.
Thank you for the opportunity. I just missed some part of the conversation. I just want to ask what is the outlook for the next quarter? Can you share your thoughts, please?
No, we are not giving any guidance for the next quarter or next year, Mayur. So apologies for that.
Okay, no issue. Thank you.
Thank you. The next question is from the line of Srinivas from Rockford Consultancy. Please go ahead.
Good evening, sir. Congratulations for excellent set of numbers. Some of the questions are already answered, so I will not repeat the same. How much is your assumption of say 5 year going ahead? How much will be the store count across the formats?
Srini, we've talked about in the past that we are looking at a annual run rate of opening new stores at about 200 to 250. We've demonstrated that in the same year, and that is what we are looking at for the next few years also. Okay.
My next question is, how is the response in tier 2, tier 3 cities and the smaller towns, etc.?
The response has been terrific. If at all, it has surpassed our expectations. And that's the reason, it is getting reflected in the numbers also. So that is what we've kind of talked about in the past, that today, as far as the consumer mindset or the consumer aspirations are concerned, there is no difference between a metro city or a small tier 1 or a tier 2 city, given, let's say, the overall macros and the internet penetration and all. So we've seen some great responses in smaller cities. So.
Thank you very much.
Okay.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Priyam Timawat from Infinity Alternatives. Please go ahead.
Yeah, hi sir. You just highlighted the fact that most of our delivery-based business is coming from the aggregators, and we are happy with that, and maybe it is beneficial to us. But when we take the example of a larger peer, they have been following a different approach wherein they deliver themselves, and probably they have a higher share coming from their own app. So can you help us with why do you think this is better versus what the others are doing, and can you give your take on that?
Look, every company has its own strategy, and that is what I think we've talked about in the past also. Let's say if you look at the peer group, when they started delivery business, there were no food aggregators available. There was no internet penetration, and therefore the mobile phones, the way they are available today, wasn't there, and therefore there was no option but to kind of create own delivery network. Whereas when we decided to pivot our model from a dine-in focus to a delivery focus, we had multiple options in front of us. We evaluated all the options from all sides, and therefore we took a conscious call that it makes sense, given the evolution and the size and scale that we have with our brands, to go with the food aggregators rather than creating our own delivery infrastructure. And therefore that is really helping us from a ramp-up perspective. At the same time, it becomes a variable model versus a fixed model if you were to create your own delivery infrastructure. Economically, there's not a big difference between your own delivery infrastructure, and you can see the margins as far as Pizza Hut margins are concerned and the peer group margins are concerned, they are not hugely different. So therefore, after having considered all of these criteria, we took a call that we would like to go with food aggregator platforms. That is not to say that we will never move to our own, but given the size and scale that we are at currently, we will be sticking to food aggregators for some time.
Understood. Thanks, sir. Thanks for your elaborate answer. Thank you.
Thanks.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then one. The next question is from the line of Ashit Desai from Emkay Global. Please go ahead.
Yeah, hi everyone. Thanks for the opportunity and congrats on the good set of numbers. I just had one question on the capex. Could you indicate what is the capex incurred during the 9 months and what is our current cash position?
So Ashit, as we talked about earlier, our blended capex across the brand portfolio would be about 1.2 CR per store roughly, which is blended across KFC, Pizza Hut, Costa, Vangu, all the stores. And whatever we've incurred so far in 9 months is in line with that.
Okay, so around 220 crores or so.
Yeah.
Okay.
And again, just to kind of add to all of that has been generated internally, and there has not been any additional borrowing in the books compared to what we talked about earlier. It is absolutely the same. So therefore, so we are generating good cash, as you can see in the EBITDA's performance and so on and so forth. So we are in a good, comfortable position.
Got it. And fair to assume this will continue, that entire new store addition will be funded by the internal accrual?
Absolutely, yeah.
Okay, thanks. And all the best.
Thank you so much, Ashit.
Thank you. We take the next question from the line of Yashwant, an individual investor. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my question is with respect to the competitor. So about the Popeyes, which was opened in Bangalore location. So do we continue to ramp up the stores along with the new products that we plan to launch every year?
Yes, absolutely. We will continue with our new product launches, and we will keep ramping up our store count also as per the guidance that we gave during the pre-IPO.
Okay. And regarding the competitor as such, like how much of it would have an impact with respect to the ADS that we are currently having with respect to KFC stores?
Yashwant, so far we've not seen any ADS impact on our stores because we are monitoring our stores in the same micro market where the new stores have come up. We've not seen any impact. As we talked about earlier, that let's say if a new brand is coming in, it will help expand the market. That is what we've seen earlier with Burger King and McDonald's. That is what we've seen with Pizza Hut and Domino's. The same thing probably we'll see with KFC and Popeye also. So we welcome the competition. It will expand the market. It will help us also. So therefore, we welcome whatever is happening.
Okay. And one last question from my side. So this is about the small stores formats that we are planning. So is it, strategically placed not just in the malls? So will it be placed across the communities where people stay in a huge density and the colleges? So anything of that strategy that has been planned?
It will be a mixed breed of both. It will be a mix of both. It could be high street. It will be high street and malls also, and also some in the food courts there. So it will be a mix of all there.
Okay. Thanks for me.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments.
Thank you very much to the participants for attending our investors call. And for any details, you can anytime reach out to our investor relations team, and it will be a pleasure to satisfy your requirements. And thank you very much once again for your patience, your time, and the exact phone numbers are given in our presentation. Thank you very much.
Thank you.
Thank you. On behalf of Devyani International, that concludes this conference. Thank you all for joining. You may now disconnect your lines.